Yes, people, today we're going to be going through our performance last week. Me and Arjun, between us, managed to catch over 16R last week. I mean, it was a huge week for us. Markets played out lovely, but I'm going to show you how we actually caught these moves. Because it's not about the number. 16R, yeah, it sounds great, but this isn't happening all the time. Everyone has negative weeks as well, but it's about when ideal scenarios are happening in the market, how to capitalize on this. So, I'm going to go through the process. I'm going to show you the trades themselves, run through it in real time as well, show you how you could have caught their moves. And yeah, anyone can have a big week, but it's not. We need to understand why that happened, right? We need to understand why the market was moving like this and how you're able to capitalize on it. Because if you don't understand the why, then you're not going to be able to repeat it. So right now, I'm just going to run through exactly what it is that we were looking for on the week. Um, let's start with Euro USD, right? So all these trades were caught on live as well. By the way, if you're not joining into the TikTok lives, then you're missing out. You can see here on the Wednesday, managed to catch 2.37R with this trade on EU. I'm going to run through these in a second individually. We're going to hop onto FX replay and actually run through the data itself, run through the candlesticks and show you exactly what we were looking for. Caught this 3.11R trade on EU as well on the Friday. I mean, Friday's price action was lovely. I'm sure a lot of you caught some wins on that day. GU again on Friday. This played out absolutely perfectly, especially this re-entry here. So don't get me wrong, it would have been nice if we did target all the way up here, but we didn't quite get that. But I mean, you're not really complaining with 16R, right? So that was EU and GU. On gold, we managed to catch two positions. On Wednesday, we caught a long, and on Thursday, we caught a short. And finally, on silver, I mean, if you don't know already, I predominantly trade EU and GU, and Arjun trades the metals market. So, as to why we got positions on all of these. And yeah, silver on Wednesday managed to catch a move as well. So, we actually didn't take any losses this week, which is obviously ideal. Can't expect this from all weeks, so don't just go into the markets expecting to hit constant wins, because that's not how trading is. We're going to show you the good sides of it. Yes, we had a good week, but we're also going to show you the bad sides of trading as well, and just we're going to show you how consistency is everything in this game, right? If you're consistent in this game with your entry model, understanding your macro narrative, with your technicals, consistency beats absolutely everything. It's a probability game, right? And with probability, you got to have consistency. So these were the trades we actually took. I'm going to show you on FX replay now the reasons we took them as well. I'm not sure if you noticed, but majority of our trades, I think other than one trade, were all long. So we were against the US dollar. We're looking to short the US dollar, right? If we're going long on anything against the dollar, then we're shorting the US dollar. We're looking for dollar weakness. So you can see here on EU, we took two longs. On GU, we took two longs. These were on the same day. Gold, we took one long and one short. This was purely off technicals, this one, but we're looking for that retracement, but I'll go through this in a second. And silver, we took a long on the Wednesday as well. Now, the reason we were looking to fade the US dollar, we were looking for dollar weakness, is purely because of oil, right? So here we had a ceasefire agreement. I know fundamentals right now is a lot to get your head around. Things are happening constantly throughout the market, right? Every single day we're getting another headline news about this has changed and that has changed, but we've got to follow the macro. So our whole thing is that we understand what fundamentals are saying, and then from there we use our technicals to get in line with the market. So we had a ceasefire agreement here. Market sold off heavily, right? At this point, we wanted to see some sort of retracement back into this imbalance. Market has moved so quickly here, we want to let the market trade up into this level within here to see, to rebalance that, right? To give sellers an opportunity to get in. Because obviously when prices move this quickly, not all sellers have had an opportunity to get in. So we want to see markets come into this 50% at least, come into this imbalance to then sell off again. So this was the reason for shorting the dollar, going against the dollar. Because if oil was going down, then dollar should be going down. And that is based off, if US oil was going up, for example, if oil is going up, that means inflation is going up. Now, if inflation is going up, that means interest rates should go higher. which means stronger dollar. And the exact opposite for dollar weakness is what we were looking for. If oil was looking to come down, then the dollar is looking to come down as well, because inflation's not going to be as high. So that is the reason we were looking to short the market really. So we were looking for them shorts on EU, GU, which I just showed, and on the metals market as well. I mean, we did have one long on dollar. No, sorry, one long on gold as well, which played out quite nicely. Sorry, one short. But the rest were all longs. So I'm going to run through a few of these trades just to show you how we line up our technicals with the macro. So when you're approaching the markets, you've got to approach the markets with an idea of what's going on in the big picture. Where are the big players putting their money? Where do they want to be long or short in the market? And if you've got that right, then it's quite easy to align your technicals and sort of get a small part of that pie, right? If these lot are moving the market in one direction, these big players, these big institutions, then you want to be in the same direction as them. And this week, the same direction as them would have been shorting the dollar based off US oil looking to come down based off ceasefire agreements. Now, I know if you're not really too clued up with your macro, that might be a lot to get your head around, but this is how you need to start thinking about the market. It's not just technicals. Technicals are important, and I'm going to show you now how important technicals are to get in line with what is going on in terms of macro. But yeah, this is how we're going to start trading now. You want to be aligning your macro narrative with your technicals. And if they line up, then bang, entry. And that's how you catch moves like this and have good weeks like this as well. So if I just move over to FX replay, and I can show you exactly why we got into some of these positions. Right, so let me just run through a few trades that we took. I know I just mentioned that we were looking for them longs. So we were looking to short the US dollar based off of US oil and the ceasefire agreements. So let me show you how we managed to capitalize that on EU this week. You can see here on the 4 hour, we've come in and tapped into this fair value gap. Now, if I didn't have such a clear understanding that there's going to be a real want for price to head higher, so for the US dollar to come down. So really and truly, if I was just looking at technicals itself, I would have probably been looking for a deeper retracement into this area, coming to some sort of a discount. I would see this as an imbalance. But because I knew how aggressively price was going to trade this week, based off everything that's going on in terms of macro, where the big players are positioning themselves, this is how we managed to capitalize on that. So if I just skip through, what time are we at here? We're at 5 a.m. So I get to my desk at around 7 a.m. That's when I start trading, 7 a.m. So it's now 7 a.m. I'm at my desk. What am I looking for? So we've got this 4 hour fair value gap here, which I mentioned. I want to see this low get taken out again. Now the reason for that is because this is Asia's low. So I want anyone who's sort of premature to the market, who is long in already off of this 4 hour fair value gap, to be stopped out. Because in order for price to go one way, I want to see people getting stopped out going the other way. So again, just waiting for this low to get taken out, Asia's low. So if we just skip through here, it's been taken out now, right? So if we drop down to a 5 minute, now we're looking for potential entries long. I mean, again, like I said, I probably would have been looking for a deeper retracement if it wasn't so heavily bullish. And again, a lot of people would be looking for them shorts from here. So let's see how price plays out. If I drop to a 5 minute and skip through. Now, this fair value gap was one I was really interested in, because I was sure that a lot of people who are desperate to get into the market were just sort of setting up a position like this and longing from here. Now, I wanted to see these people get stopped out before I enter the market, right? You want to see them early buyers get manipulated. Here, you can see pretty rapidly after 15 minutes, stopped out. So now I'm really looking for my longs. Now I'm ready to enter the market. I'm looking for price to show me something to enter. I'm waiting for them confirmations at this point. If I skip through, you can see we're starting to get some bullish price action now. This for me, still not enough. Still not enough. So we're still waiting for them extra confirmations. Continue to skip through. Right, we've got this fair value gap here, but I do want to see price trade above these levels here. I want to see us close above them, and we've got that now. So at this point is where I've set my limit, put my stop at the low, and I was targeting these relatively equal highs up here. Now we managed to get a tap in not too long after that. and then you can see price just flew to the upside, right? Now, this is how you use macro to get in to line up with your technicals. Now, on the day, I probably wouldn't have been looking for longs as aggressively as I was if I wasn't understanding the fact that this week I'm expecting price to go higher because of de-escalations with everything that's going on fundamentally, all the geopolitical tensions. There seemed to be some sort of de-escalation. Obviously, we know now the Strait of Hormuz opened up, then it closed up again, and it's all over the place. But this is how we managed to capitalize on the fact that there was de-escalations last week. So this was the first Euro USD trade. We also had a trade on the Friday. If I can just skip through to that 1 second. Right, here we are. Sorry, went a bit too far there. Now on the Friday, quite similar, right? We're still respecting this 4-hour fair value gap. We also have this huge move lower. We took out the high and had a huge move lower. Now I'm thinking, if I saw this, a lot of people would be having sell limits within here. They want price to come lower into this level. Like I just said, if it wasn't for my macro understanding, I would have probably been short in this market here. I probably would have looked for a retracement back into this bearish fair value gap. You can see technicals here line up quite nicely as well. If I draw out the fib, I mean, it does gets that 4-hour fair value gap also lines up with that 50% level as well. So I know a lot of people are looking at this market ready to short, but me understanding what's going on in the bigger picture, I'm still ready to long, right? This Friday, looking for them longs. Now we're at 4 a.m. here again. Oh, sorry, I've got it at 4 hours. Let's take us back to 7 a.m. our trading times. Now at 7 a.m. the difference between this trade and the trade on Wednesday is that we've already taken the low, right? We've already taken Asia's low. Now, similarly to before, looking for them moves higher, right? Looking for any reason to get in, waiting for them confirmations. You can see here we're having quite slow movement to the upside. But if we go to the 15-minute, you can see that we invalidated this FVG here. So again, a lot of people would have been having their sell limits within here. So if you've got your sell limits within here, the stop's probably going to be at that high. So I want to re-enter when we retrace back to this IFVG here. Now there's a lot of buy side liquidity up here, which you can see, which lines up with this 4-hour fair value gap as well. So let's see if we get that retracement. I mean, obviously we know we did, but this is what we were waiting for on the day, right? And we were targeting 18067. So we were targeting at this area here, which would have been in and around this 4-hour order block. I was actually targeting this 1-hour FVG that was here. And the reason for that is because it was in a premium level, and if we were going to reject anything, it would be in and around this level. It also lined up with the OTE quite nicely as well, hence that's why that was my target. But yeah, so we had our limit set at this point, waiting for price to tap us in, got that tap there, and if we just skip through price action, absolutely flew. I mean, in hindsight, it would have been nice to hold it a bit longer, but again, we were looking for them aggressive entries to go long because we were so aware of the fact that US oil's coming lower. If US oil's coming lower, like I said before, that means that dollar should be going lower as well. So lining up that macro narrative with your technicals is absolutely key to understand how to catch these big moves and have these big weeks as well. Now, don't get me wrong, I do want to be clear about something. 16R in 1 week is great and everything, but it shouldn't be your expectation. You don't want to enter a week thinking I need to hit this 10-hour trade, I need to hit this 5-hour trade. It's not like that. All you want to focus on is consistency. Now, if you are focusing on sort of getting them, I need 5-hour this week, I need 2-hour this week, you're going to force positions. And if you force positions, you're going to lose. I mean, for us, the goal is always the same. Understand the macro, number one. Understand our risk profile, well, how much we're willing to risk on that week, what we're looking to do, if we're willing to trade aggressively, and if we are willing to trade aggressively, why are we willing to trade aggressively? And then it's just following your model, lining up them technicals with that macro allows you to catch moves like this and allows you to have weeks like this as well. So don't get me wrong, some weeks will be negative trading like this, but consistency is key, man. If you're looking to have long-term profitability in these markets, you need to be consistent over a long period of time, and that's about it, man. But if you also want to catch moves like this and have weeks like this as well and understand your macro, drop us a message. The Discord's in the description. But yeah, hopefully we can have a few more weeks like this. But yeah, hope you enjoyed that video and learnt a little bit from it. But yeah, I'll catch you guys in the next one.